Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ABC Annual Report. Agricultural Bank of China Limited offers a wide range of banking products and services to its customers. At the corporate level, the bank provides loans, trade finances, guarantees and commitments, commercial drafts, and entrusted syndicated loans. It also offers certificates of deposit, deposits accounts, and credit and debit cards. In addition to these services, the bank provides personal banking products such as housing loans, consumer loans, personal auto loans, business loans, and fixed asset loans. The company also offers investment banking, custody, financial market, and financial institution services. Its wealth management services include trading and wealth management, personal fund collection, and automatic transfer services. The bank's agriculture operations segment provides agro-related products and services to both corporate and individual customers. These services include telephone, mobile, self-service, and SMS banking services. The company also offers financial leasing services, fund management services, asset custodian services, and insurance and reinsurance-related products and services. Agricultural Bank of China Limited operates through its domestic and overseas branches, as well as representative offices. With a history dating back to 1951, the bank is one of the leading banking institutions in China, providing comprehensive financial solutions to its customers. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of various financial indicators. On the growth side, several factors have contributed to increased revenue. One key driver is the balance of technology loans, which has seen a significant increase of 20.1%. Additionally, the green finance strategy has also played a crucial role, with an 18.7% rise in green loans. The pension finance service system has also experienced growth, with a 22.6% increase in the scale of pension funds under entrusted management. Another important driver of revenue growth is the expansion of assets under custody, which has increased by RMB 0.19 trillion, 6.8%. This growth can be attributed to an increase in insurance, mutual funds, and pension funds under custody. Furthermore, the pension business has seen a 22.6% increase in pension funds under entrusted management, while inclusive finance has experienced a 21.7% growth in inclusive loans to small and micro enterprises. On the other hand, revenue decline can be attributed to certain factors as well. One notable example is the Hong Kong Securities Clearing Company Limited, which has seen a significant decline of -2 billion, 10,367,728 A shares. This decline may have contributed to a decrease in revenue for the company. Net income and profit margins. A changing landscape. The extracted summaries reveal a mixed picture of changes in net income and profit margins. On one hand, net income increased by 3% in 2025 compared to 2024, with a significant jump of 56% from 2024 to 2025. This growth can be attributed to various factors, such as an increase in assets under custody, interest income, and fee/commission income. However, the profit margins tell a different story. The return on average total assets and weighted average net assets decreased significantly from 2021 to 2025, indicating a decline in profitability. The net interest margin also saw a decrease from 2.12% in 2021 to 1.28% in 2025, further contributing to the decline in profit margins. The operating profit margin showed a slight decrease from 44.8% in 2024 to 44.5% in 2025. While the net income margin increased slightly from 41.9% in 2024 to 42.2% in 2025. The reasons for these changes are multifaceted and require further analysis. In conclusion, while net income saw a significant increase, profit margins experienced a decline due to various factors such as decreased net interest margin and operating profit margin. A closer examination of the underlying causes is necessary to understand the implications of these changes on the company's financial performance. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the provided data, in both 2025 and 2024, the net cash flows generated from operating activities were significantly positive. In 2025, the company recorded an impressive 2 million, 112,907 million RMB in positive operating cash flow, indicating a substantial increase from the previous year. This trend is also reflected in 2024, where the company achieved a positive operating cash flow of 1,353,042 million RMB. These figures demonstrate that the company has successfully managed its operations to generate sufficient cash flow, positioning it for continued growth and success. The company's debt level has undergone significant fluctuations over time. While there have been instances where the total debt level decreased, such as by 2.3% from RMB 210,123 million to RMB 204,612 million on page 353, and by 4.5% from the previous year on page 391, there have also been periods of increase. For example, the total debt level rose from RMB 23,219 million to RMB 30,914 million on page 360. In terms of interest expenses, the company has experienced both decreases and increases. On page 346, interest expenses decreased by a significant margin, while on page 354, they dropped by 8.4%. However, there have also been instances where interest expenses increased, such as due to a larger interest rate gap in 2025 compared to 2024. The company's debt management strategy appears to be complex and influenced by various factors, including changes in market conditions and government policies. While the issuance of debt securities has increased slightly, other aspects of the company's financial situation remain unchanged or have experienced fluctuations. The performance of various regions and segments in the given data reveals a mixed picture. On the positive side, the Yangtze River Delta and Pearl River Delta regions have shown strong performance across multiple pages. These regions have been consistently mentioned as performing well. In contrast, several regions have underperformed. The head office, Bohai Rim, Northeastern Region, Overseas and others, and Western Region have all been listed as poorly performing areas. This suggests that these regions may be facing challenges in terms of growth or development. Looking at the segments, domestic deposits, retail deposits, agricultural industry segment, rural governance and people's livelihood services segments, interest income from intrabank balance, net fee and commission income, and other non-interest income have all performed well. These segments have been identified as strong contributors to overall performance. On the other hand, the county area banking business segment has underperformed. This suggests that this segment may require attention or improvement in order to boost overall performance. The company has a history of paying dividends to its shareholders. This practice is clearly stated in the document, specifically on page 18. Furthermore, multiple pages throughout the document confirm that the company has indeed paid dividends, with references found on pages 77, 123, and many others. In fact, the frequency of dividend payments is evident from the numerous page numbers listed, indicating a consistent practice over time. On the other hand, there is no mention or indication of share buybacks in the provided document. That concludes the financial summary for ABC. Feel free to comment below, and I will be happy to answer them when possible.